Economists expect the Reserve Bank's Monetary Policy Committee to keep interest rates on hold this week. Thursday's meeting marks the first since the implementation of U.S. tariffs in August, which is expected to weigh on local inflation and growth. It's also the MPC's first gathering since the bank announced it would now officially target the lower end of its 3 to 6% inflation band. Hyprop Investments has delivered a 7.5% increase in distributable income for the year. This was driven by double-digit growth in South Africa and Eastern Europe. A final dividend of R1.94 has been declared. This takes the total for the year to R3.07, which is an increase of almost 10%. Looking ahead, Hyprop says the group is well positioned to capitalize on the significant momentum it has built over the last few years, and so anticipates an increase of between 10 and 12% in distributable income per share for the 2026 financial year. Attacq has shot the lights out. The Mall of Africa owner has posted a 25.6% increase in full-year distributable income per share and a more than 40% jump in headline earnings per share. The Real Estate Investment Trust's full-year dividend has been upped by 26% to 87 cents. Attacq expects to grow its distributable income per share in the coming financial year to between 7 and 10%. The firm says this growth will be driven by several key factors. These include rising market rentals, disciplined cost management, and the successful leasing of vacant spaces and completed developments. Investors are hungry for Libstar. The food producer has confirmed that it has received approaches from potential buyers interested in acquiring the company. The firm's board is currently evaluating the non-binding expressions of interest, but the company has cautioned that the talks are still at an early stage, and so caution should be exercised when trading in Libstar's shares until further updates can be provided. The announcement comes alongside the release of the group's interim results. Normalized headline earnings per share rose 15.4%. The firm says this reflects customer and channel growth as well as ongoing portfolio and operating model simplification. No interim dividend has been declared, which is in line with the group's policy of paying a single dividend at year-end. RFG has raised a red flag on tariffs. The maker of canned products such as Bull brand says the impact of increased tariffs on exports to the U.S. remains uncertain, and the outcome will depend on whether existing customers continue to contract with RFG or shift to producers in competitor countries with a tariff advantage. Given this risk, the group is working on contingency plans to increase exports into other existing geographies and to pursue new markets. The commentary comes alongside an 11-month trading update from the group. During the period, revenue ticked up 2.4%. This was supported by the firm's regional segment as its international division took strain due to the global oversupply of deciduous fruit products, which weakened demand. Full detail will be made available when RFG publishes its annual results on the 19th of November. Premier says it expects to deliver mid-single-digit revenue growth during its half-year. That's as a result of deflation in soft commodity prices. But the food manufacturer has noted that appropriate capital investment, margin management, operational efficiencies, and cost-saving initiatives have sustained the compound growth in earnings it's achieved since listing. And that implies to the 6-month period as well. It expects headline earnings per share to be as much as 30% higher. The firm will open its books on the 11th of November. Anglo-American and Chilean state-run copper giant Codelco have finalized an agreement to jointly operate their neighboring Chilean copper mines. The move is expected to unlock at least $5 billion in value from their key assets. The plan relates to Codelco's Andina mine and Anglo-American's Los Brancos mine. A new jointly owned operating company will oversee execution of the plan, while both parties will keep ownership of their respective assets. The agreement also includes sustainability principles and flexibility to adhere to the company's environmental commitments.